Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
You're with us here on a fresh new edition of Mid-Cap Radar. I'm Prashant Nair. With me is my colleague Reema Tendulkar. The market is off the highs. I mean, the Nifty is down about 30 points from the highs. The Bank Nifty is actually in the red about 1/3%. It was down more, but it's quite a bit off the highs. The mid-cap index and the small-cap indices are also 20, 30 odd point respectively off the highs. Advance decline has become a little weaker, although overwhelmingly in favor of advances. Reema, afternoon.
Hi, afternoon, and no real problem emerging, at least in the global market. So Asia had a good session. Hang Seng was up close to about 400 points. In the European markets, it's the CAC and the DAX higher by close to about 0.5%. FTSE is just like meddling along, so up close to about 0.1%, but in the green, you would say. For our own markets, profit booking is coming in the outperforming stocks. Bajaj Finance, Finserv, Kotak Mahindra Bank under pressure ever since it came out with its numbers. HUL has lost ground. Reliance Industries are looking weak, and plus a couple of these IT names like HCL Technology as well as Wipro. We'll discuss the market trends in greater detail. Before that, a quick run through of the top headlines. Okay, before that, we're getting the numbers in from Info Edge. That's posted a good set of numbers. The revenue growth has come in largely in line with expectations. Margins too have improved by nearly 90 basis points this quarter. Chintan Thakkar, the CFO of the company, joins us on the show now. Chintan, good afternoon and thanks so much for joining in. First, if you could start with Naukri. Q4 was subdued. Q1 performance is looking a lot better with an over 15% year-on-year growth in the current June quarter. Has the demand situation improved? You had earlier alluded to soft hiring in the IT sector. Walk us through the demand trends.
Yeah, so you are right. Overall recruitment segment has done much better. We are kind of if you look at the billing growth, YOY, it's been kind of 15% growth, and that has been a good result. And if you kind of go a line below and if you start seeing it that where actually the growth is, yes, IT is one of the segment which this quarter has done better than past many quarters. So there is a kind of a little bit of a recovery that we can see in IT. However, it's just one quarter, so it's kind of early for us to kind of give a trend. But yes, IT has been kind of doing better. Insurance sector, for example, would be doing better. Auto sector, is doing better. So there are certain segments, or certain sub-segments, which seem to be doing better, and that's what has led to this growth.
Could this be in any way seasonal? The IT sector leading the growth for Naukri?
Yeah, I mean, as I said, that it's just one quarter, right? So it's a little early for us to kind of say that this is the trend, but certainly this is the case for so far as this quarter has gone, and we are hopeful that it will continue. I mean, that's some of the analysts have been suggesting, better days in terms of recruitment for IT, but we'll see how it kind of goes, in the coming quarters.
Okay, by the way, stay on, Chintan. Kajaria Ceramics net profit has come in lower than expectations. At least in terms of the consolidated revenue too has been a miss. So that's a miss of close to about 23 crore compared to expectation, and profit too has come in at 45.5 crore versus 52.5 crores. So revenues and profits come in lower than the CNBC TV 18 poll. You could say the same about EBITDA as well. So prima facie, the frontline numbers for Kajaria Ceramics appear to be muted and weaker than market expectation. The stock is coming off as we speak, now currently in the red. Any more color on the number?
Nothing else. That's it. I mean, actually on all parameters, I think the stock, the numbers are a bit, the EBITDA numbers are also miss. Margins are also, much below what was expected. The stock is holding maybe, it's already seen a fair bit of correction, so it's not really selling off on the back of these numbers. Chintan, so just to stay on with the numbers at Info Edge, what was the Naukri revenue growth for the full last year? And 15% you've done in the quarter, you said it's just one quarter, but what are you hoping the full year revenue growth for Naukri could look like?
Well, last year it was little subdued. It was kind of in lower teens, and this is now we have gone to mid-teens, which seems to be kind of a little bit of a recovery. Well, we are not really giving guidance, for the future quarters, But if if IT becomes a trend, then obviously we can look at better growth than what we have been kind of doing it in the past, right? But again, I think there is a little bit of a kind of a dependency on how the IT is going to grow, how the other non-IT sectors are going to grow. So it depends a lot on how the each segment will grow. But we are kind of pretty hopeful that it could be better than what it was a few quarters back.
But you're a market veteran at reading the signs in the tea leaves. What's your own expectation? Will this pickup in IT sustain for the full year? And also, while you're at it, if you could walk us through the demand situation at 99 acres. It's the third consecutive quarter of a 30% plus revenue growth. How is that shaping up for you?
Yeah, well, it's easier to kind of now give a trend to 99 acres than to recruitment business, because now, as you rightly said, that it's third quarter where we have been kind of showing a good growth, and we are very excited about it. I think there is a gradual recovery happening on the real estate side, and I think we are very excited about that part of the business. So overall growth is is both, it's because of how the recruitment business has gone, but it's also about how 99 acre is growing. So I think inside the company, apart from recruitment business, 99 acres is the real big bet that we have taken, and we are very excited to see the kind of growth at a higher, more than 30%, 35% kind of a growth.
So is it sustainable, a 30% plus revenue growth, and your own forecast of losses for 99 acres going ahead?
Yeah, so last 3 quarters, I think if you go by that, then I think it looks like that there's a trend that there's a gradual recovery, and if that would be the case, certainly we would we would aspire to grow even faster than what we have been growing now. And we have been investing for it, by the way. So I think if you see that we have been investing a lot more on the promotion, on the branding side, as well as in last 2 years we have invested a lot on technology side, and that investment will continue. So both technology and branding investment is also kind of gone up, and that's resulting into better numbers. And in fact, just not about the financial numbers. In fact, we are kind of even more excited when we look at the quality of the growth, right? Because a lot of growth has come from the broker side, and that's the hard part of the business, to kind of give a great ROI to brokers, but looks like that business seems to be going up. Overall, looks like that the inventory for all the large projects seems to be coming down. Although number of projects launches are probably not as high as what we would have seen in the kind of 4-5 years back when the real estate market was at its up. But we are hopeful that with RERA settling down, maybe the number of projects also will go up. So even that segment will start doing much better than what it is. It is certainly growing, but right now it is the broker segment that's growing even faster than what the builder segment is growing.
By when could the losses become a very small, minuscule number?
Well, I don't think we should, kind of too much get concerned about the losses, right? It's our internet business, it's winner takes most. So far, we have not invested too much on the real estate, segment side. If you take it right from day one till today, it would be something like an gross investment of $35 million. So I don't think that the investment that we have made, so far is a big amount, And again, it's not, about, small losses here and there. It's all about, are you kind of increasing your traffic? Are you, winner takes most? Are you becoming the top leader? And I think we are kind of marching ahead on that trend. It's just not about the financial number, but if you look at our traffic number,
sure,
seems to be kind of, 50%, kind of a range. So the traffic number is also very key, in the way, we look at our business. And that also seems to be growing up, last, 6 to 9 months, So all the signs are, are very positive for us, and we are very bullish about that.
Okay. Thank you very much, Chintan, for joining in. Kajario's volume growth has come in line with expectations. That's come in at close to about 9%, which is in line with the CNBC TV 18 poll of 8 to 10%. The stock is now reacting positively, higher by close to about 3.5%. Let's get in Ashwini Gujral into the discussion and get a quick, sense on what the market technicals are suggesting. Ashwini, how would you trade the last 2 hours of the market now and your individual stock ideas?
Well, the market again seems to be a bit of a two-sided market. Now, all the all-time high stocks, which are the strong stocks, are down almost 2+%, whether it's IT or finance or, even Reliance. And what's going up is not the best of quality, and it's more like, short covering type of move. So that way, at all-time high, the strongest stocks are being sold. Who generally owns these stocks? I think they are owned by the strongest players in the market. So that way, while mid caps do show that things are going up, whether it can sustain, because if all these large cap stocks continue to sell off, then it will become difficult for the Nifty to hold on to 11,100. So having said that, Jubilant Food is a sell with a stop of 1430, target of 1390. Bajaj Finance is a sell with a stop of 2720, target of 2640. And NIT Tech is a buy with a stop of 1170, target of 1225.
Ashwini, though, you'd agree that it is possible the Nifty kind of does nothing, stays around where it is without correcting too much, and the mid and small caps see some meaningful bounce at some point that will stop, but we've hardly started.
Well, it's already been meaningful. 500 yesterday on Junior Nifty, 500, almost 600 today on Junior Nifty. See, the whole point is that Nifty, to stay here, needs to see buying in large caps, and that is not really visible. If you stay a couple of days here, then the bears get that chance again, and because people think this is a breakout, so most people are on the long side. So the momentum is missing in the large cap indices, and that's where sometimes a trap can be set up, because you are still way away from the election, no opinion poll, etc. If big money does not support this rally, then sometimes the breakout seems to come into question. I want Kotak to go up. I don't really care if PFC REC goes up. So we have to see how this gets resolved.
Okay, welcome back. 42, 43 points on the Nifty. We're at about 11,127, a third of a percent higher. So, I mean, the Nifty is basically trying to stage a bit of a comeback. At one point, after that sell-off, there was only about 20 points left. But now we're basically going back to where the market has spent the most amount of time through the course of the day, which is the 130 odd region. So that's basically what's happening on the Nifty. Bank Nifty is also trying to come back. I mean, after losing a fair bit of gains and going down into the red. So the day low on the Bank Nifty was about 26,868. And from there, we've recovered about 100 odd points or so, the Bank Nifty, that is, the Nifty Bank. It's seeing a bit of a turn down once again, but I mean, for what it's worth, it's already off the lows by 100 points. And the Nifty Mid-Cap Index, if we can put that up, is also making an attempt at going back to the high. It's only about 15 points away from its day high. Same is the case with small cap index as well. So across the board, there is some comeback which is going on. We've got the management of Uflex with us. They've launched a new product which they showcased at a global sort of industry conference in China over the course, I think, between the 11th and 13th of this month. The management joins us to talk about that. Rajesh Bhatia is Global CFO of Uflex, and he's with us. Mr. Bhatia, thanks very much. So, could you talk about the product that you showcased in China, and tell us, I mean, just explain what the product really does. What's the utility? Which industry does it cater to? Just the basics first, sir.
Okay. So largely in the aseptic packaging business, which is quite large in China. When in India we talk of the market size of about 10 to 12 billion packs a year, the China talks of about 90 to 100 billion packs a year on the same set of the population numbers almost. And so there is a huge requirement for the premium packs, which are holographic packs and which are some special effects packs with the foil stamping and some other features which give huge impetus to the outside look of the pack, the way it is seen on the shelves with some glitters and all that. So China is that market in China is growing at about 10%, and having commissioned our facility in India, we want to concentrate more on the value-added products rather than the plain vanilla kind of the packs. So that's why this opportunity of participating in the ProTech in Shanghai and showcasing our products to the companies globally. That's what the endeavor was, and as part of that, we not only participating in China, we are also participating in Europe, in Vietnam, and to showcase our strengths.
Okay, Mr. Bhatia, unfortunately run out of time. We'll continue this conversation another day, but that is UFlex and positive commentary coming in from Kajaria Ceramics Management, as you can see on your screen. With that, we've run out of time on Midcap Radar. Thanks again for watching our special Mutual Fund Corner. When we return.